All right, let's do some questions to emphasize the great stuff we just talked about. Start with question number 9, numero 9. Clark filed Form 1040-EZ for the tax year. In July of the next year, Clark received a state income tax refund of $900 plus interest of $10 for overpayment of his state income tax. What amount of the state tax refund and interest is taxable in Clark's federal income tax return? So in the first year we did an EZ. What was the rule? I said if I didn't get a benefit in X1, then your refund is not taxable in X2. If you got a benefit in X1, remember if you took the itemized deduction on Schedule A, state taxes, that means it reduced your taxable income in the first year. Then in the next year, what happens? Then it says taxable refunds from state and local income taxes, you include it. So if he did an EZ in the first year, then in the next year, what's going to be taxed? The $900 state refund? No. The $10 of interest is taxable? Yes. Best answer, B, $10. Last sentence first, because I forgot to do it in the last one. You see numbers. The amount of lottery winnings that should be included in their taxable income is what? So what is the lottery winnings included in their taxable income? In the year, Emil Gao won $5,000 in a state lottery. Also, Emil spent $400 for the purchase of lottery tickets. Emil elected the standard deduction. The standard deduction means what? He's not itemizing, not doing Schedule A. He said, I'll take the $5,800 you're giving me in his tax return. The amount of lottery winnings should be included. So what does he do? He's got lottery winnings, $5,000. He did not itemize, so he can't take the $400 deduction here. What's included? Net amount, $500. Answer D. Twicky. Next one. Last sentence first. Disregarding the AGI percentage threshold, what amount can Scott claim in his income tax return for medical expenses? So they're saying disregard the what? Disregarding the, what is medical? 7.5% of AGI. Forget that. During the year, Scott charged $4,000 on his credit card. If you charge it as an expense, yes, even if you haven't paid for it. For his dependent son's medical expenses. Payment to the credit card company had not been made by the time Scott filed his return in X4. Doesn't matter. However, in X3, Scott also paid a physician $2,800 for the medical expense of his wife who died. I guess he's not a very good doctor. Disregarding the AGI percentage, what amount can he claim as medical expenses? The $4,000, yes, he charged on his credit card, still deductible. The $2,800 for his wife, yes. Therefore, $6,800 is what he charged. $6,800 minus 7.5% of AGI. They said, forget that. How much? Answer D, $6,800. Next one. Number 12. All of the following taxes are deductible as itemized deductions by self-employed except. So notice the word except. So they're saying which one is not an itemized deduction. Okay? All the following are itemized deductions except foreign real estate taxes. Yeah, that would be what? Taxes. Taxes paid. Foreign income taxes, yes. Personal property taxes, yes. Tax, yes. 1/2 self-employment, no. Where does the 1/2 self-employment? Right here. 1/2 self-employment, that is I embrace. That's on the face. What about itemized? Itemized, commit. What's the T? Taxes. Foreign, local, deductible. Federal, no. Foreign, yes. All right, so answer D. Number 13. The Browns borrowed $20,000 secured by their home to purchase a new automobile. At the time of the loan, the fair value of their home was $400,000, and it was encumbered by other debt. What does encumbered mean? Encumbered means subject to other liabilities, encumbrances, debts, mortgages, and so on. The interest on the loan qualifies as what? So I borrowed $400,000, I bought a home. Then the house went up in value. I borrowed $20,000. That's called equity interest. You can deduct what? The interest on that $20,000, no matter what you buy. However, it may be an AMT item later on today. But the $20,000, I borrowed it to purchase a new car. So I bought a new car. Is that okay? Sure. What is it? Deductible personal interest? No. Deductible qualified residential interest? Yeah, called equity interest? Yes. Non-deductible interest? No. Investment interest expense? No, it's not an investment. It is residence interest called your equity interest up to $100,000. Answer B. Okay? So again, those are just some items that emphasize what we've talked about, just trying to show you how those different areas show up, how they get tested. In a minute, we'll talk about exemptions, filing status, and some more fun and exciting stuff.